We've all heard the saying, what goes up must come down. And in the stock market, that's not just a saying, it's a fact. But here's the thing, while most people panic during a market crash, the smart ones, the ones who know what they're doing, see it as an opportunity. So, today we're diving into how you can profit from a stock market crash, even if you're just starting out. Ready? Let's do this. First off, let's clear something up. A market crash isn't the end of the world. It might feel like it when you're watching the news and seeing headlines screaming about falling stocks and wiped out savings. But here's the truth. Crashes are a normal part of the market cycle. They've happened before, and they'll happen again. The trick is knowing how to position yourself to come out ahead. Look at this. Over the last century, the stock market has faced countless crashes. Yet, each time, it's bounced back stronger than before. Think about the dot-com bubble in 2000, the financial crisis in 2008, or even the COVID-19 crash in 2020. Every one of those moments looked dire at the time. But investors who kept their cool and played it smart, they're the ones who reaped the rewards when the market recovered. All right, let's get into the good stuff. How exactly do you profit when everyone else is panicking? The first step is understanding this golden rule. Never let fear drive your decisions. Easy to say, I know. But when you see your portfolio dipping, the natural instinct is to sell everything and run. Instead, you need to keep a level head and see the big picture. Here's where the real opportunity lies. Buying when prices are low. When a crash happens, high-quality stocks go on sale. Think of it like Black Friday for the stock market. Those big, stable companies? Their stock prices might plummet, but their actual value and potential don't disappear overnight. Take companies like Apple, Microsoft, or Amazon. If their stocks drop during a crash, it doesn't mean they've stopped being great businesses. It just means the market's panicking. And for you, that means a chance to buy them at a discount. Now, let's talk strategy. One of the simplest ways to invest during a crash is through something called dollar cost averaging. Don't worry, it's not as complicated as it sounds. All it means is that you invest a fixed amount of money at regular intervals, whether the market is up or down. During a crash, this strategy allows you to buy more shares when prices are low, which can boost your returns over time. Next, stay informed, but don't get overwhelmed. Follow the news to understand why the market is crashing, but don't let the doom and gloom headlines control your emotions. Often, crashes are driven by short-term events, and if you focus on the long-term outlook, you'll make smarter decisions. Another pro tip? Research, research, research. Look for companies with solid fundamentals, low debt, consistent revenue, and a strong market presence. These are the ones that tend to recover faster after a crash. You're not just buying stocks, you're investing in businesses that will thrive in the future. Now, if individual stocks feel a bit intimidating, that's okay. Another great option is ETFs or index funds. These let you invest in a broad range of stocks all at once, spreading out your risk. When the market rebounds, these funds tend to bounce back too, often in line with the overall market. Here's one more thing to keep in mind. Always have an emergency fund. Before you jump into investing, make sure you've got enough cash saved to cover unexpected expenses. The last thing you want is to sell your investments at a loss because you needed the money for an emergency. So, what does all this mean for you? A market crash might seem scary, but it's actually one of the best times to build wealth. By staying calm, doing your research, and sticking to a solid strategy, you can turn a downturn into an opportunity. Remember, investing isn't about timing the market, it's about time in the market. The sooner you start and the more consistent you are, the better your chances of building lasting wealth. Thanks for watching, and here's to your success in 2025 and beyond. Happy investing!